on the computer. As I was saying, talking about high impact news, day 3, guys. Welcome here. So I was saying here, my FX book, when you get logged in, you can alter how this looks. And again, all I have asked for is these particular countries' information. And again, only high impact news. So you can see what we've had here. This is my time. This is my time in Bali. So today, in fact, I had a live session during that with the Canadian peers. Yeah. And just now there, just before we came on, was these 4 bits of news, all high impact news. So what I want to look at, just so you know, is from 9:45, just to see the impact on that, on US. Anything with a US in it. I know so far I've been showing futures. I'll change this for just now to go to Forex pairs. And I'm just going to show anything. And I'm going to go down to the 1 minute so you can see a more realistic time frame. And I'm going to go here. So I'm going to go here. I'm going to say for me, what was that saying? 21, no, it was 09:45. It's my 09:45. Yeah, it was the news. It was today. So from there, you see we've had this huge spike up. Boom. That was on the Aussie US dollar. So I'm looking at anything Aussie, but even just before it, US dollar spike up. Euro US dollar. Again, spike up. Missed that one there. All going in this episode. I'm looking at what I'm doing here. So far, I'm using everything with the US dollar in, and all going with the same direction. Have you noticed that so far?
Yeah.
Yes.
But I'm using pairs with US dollar at the end. These are at the end. If I chose US dollar JPY, US dollar CAD, probably more so this one, it should go the opposite way. So let's just have a look. As it did. Now, some of you are seasoned enough to know that, but what would the answer be? This is supposed to be, if people know.
Well, it's reversed because it's you're in this case the US dollar, Japanese yen, you're buying the dollar and selling the yen. But if you're looking at euro dollar, you're buying the euro and selling the dollar. So from the dollar perspective, it's either long or short.
Yep. And we have another tool here called the DXY. And what this is US dollar index, and this shows you the strength of the dollar overall. And we can look at that from the last since quarter. Again, that was that big spike down. Likewise, if you're trading futures or indices, things like, don't worry about this, Leon. I mean, US 500, S&P 500, the NASDAQ, the Dow Jones, there's different names for it, depending on what you trade. So, for example, let's look at the NASDAQ. That's the technical stocks push up. If the dollar goes down, typically the indices, futures go up with a US base. And the US 500, then let's look at the Dow index, again, pushing up. Let's also look at gold. Now, this time gold is the back, as you can see there. And gold has been becoming weak. Sorry, dollar's becoming weak, so gold goes up. So for those people that are trading different styles of Forex pairs or futures, please remember that I wasn't sure if people are aware of that. Lisa, is that something you ever considered before?
I just don't know how to trade the future, so I've never tried it.
Okay, forget the word futures. No difference. You buy, you sell, and you can choose a percentage if you trade from percentages. It doesn't use the same with pips. It uses points or handles, but it's the same thing. It's the same thing. Yep. Have you ever traded with indices at all? Like the NASDAQ or
Um,
S&P?
I like gold, and I've tried the NASDAQ, but I know sometimes it just moves very radically. So
Yeah, it certainly can. It certainly can.
yeah, so I stay out of it.
Yes, absolutely. One thing I also want to bring attention to. Let me just check, David. David, have you heard of something called the Elliott wave? Just I want to.
Yeah, I've heard of it. I don't, but I couldn't say any
Okay,
more than that. I know that
that's fine.
it's out there as a strategy.
What I'm searching for is to give you something new because you guys you have a lot of at least theoretical knowledge, perhaps quite practical. I don't know how much, but you certainly sound like you've got a good base there, David. And Lisa, you have been trading. Um, there's different sort of thoughts on things. But do you see this here? Can you give me words for this here, Lisa? Just give me one or two. What would this? Give me a name. What you would call this straight across? And it's not trying to catch you out.
Consolidation.
Consolidation. Oh my God! So when it comes out of consolidation, yeah, you may have heard what I'm going to say is something called a three drive. Can you see something like a three drive going up here?
Yes.
Yeah. Now an Elliott wave, yeah, three drive, and when it goes 1, 2, 3, 4, 5, or an 8, yeah, there. So you have it goes like this, and potentially up there. Okay, or was it this one here? That's the thing. That's the downside of these things. People don't actually. When was it starting? And sometimes you don't actually know when was it starting. You see that would fit better, wouldn't it? And then it would go into something called a correction pattern. Now this is on a 1 minute. But it's nothing here. But also inside here, I could do the same thing inside here. And people say, where really? So let's just actually have a look at this one's a bit more obvious. Goes a high, a low, a high, a low. Then either that one, a high. So inside each waves, we do it again. And when some people are seeing these candles come down, all it really is this little short part of the Elliott wave. It's less clear there. Yeah. So when you're looking at trends like this, well, we in the market, and that's the tough thing to find out. Is this some people see that there? They're on the 1 minute. They might push down and see it's reversed, and they might get out, and then all of a sudden it pushes back up, pushes back down. You're like, oh, and then eventually it does this last little leg there, up to. Don't know if I did that right. Up to there. Then it pushed down, and people got all confused. So what I'm trying to say is, hi Irfan, nice to see you here.
Hello, sir.
I'm good, thanks. Lovely to see you. I'm using just showing an overview of Elliott wave. I spoke to Irfan earlier on. Everybody know. And he has been traded before, so I'd invited him here because of that. Have you heard of Elliott wave, Irfan?
Yeah, it's kind of zigzag wave, yeah?
Yeah, which is showing there. So one way to find out where it is in time and space, whatever that means, to use at least two different charts. So if you're doing an entry on a 1 minute, perhaps having a 5 minute and also a 50 minute, use a higher time frame and look for where this is, so you're not getting caught out in what all it is just a tiny little pullback. If you think of the content we covered yesterday with the stabilizer blocks or order blocks or bankers candles, whatever you want to call them, or using the fair value gaps, what we showed you, where we notice the candles go back in time. But what I'm showing today is where you can find the structure in the market. And the best way to do that is doing in a couple of time frames. So let's look at this here. So Lisa, I'll come back to you. So you use the word consolidation. Absolutely, what a mess. That's just a mess, isn't it? So one of the little things I suggest, which typically means you actually miss this first leg. You miss the first leg. Yeah. You get a little rectangle, and this might sound really obvious, and it is obvious. If you notice this, just find the high with the bodies, forget the little wicks, just find the high and find the low. Yeah. Yeah. And then just extend that right. Extend right into the future, because we've no idea when this is going to finish. We've no idea when this is going to finish. I have absolutely no idea when. So I'm going to remove these if I can, actually. And let's see if, rather than me find it, let's see if you can find these. And it's okay if you miss the first one, but we do nothing while it's in here. But the first leg you'll probably move, you actually miss when it's in here. And as long as you're okay with that, okay, there we go. I push out. So if this is the first leg of an Elliott wave or the second leg, we don't know yet. We know at some point it's going to come back down based on what we've said. Would you agree?
Yes.
Yep. So the question is, did it start here? Did it start here? Did it start here? We don't know. So we'll just pat that there. Delete that. But at some point it's gonna come back. I don't know where it's gonna end. We could make a suggestion based on what we found yesterday. Do you remember, David, we were looking for gaps yesterday? Lisa, yeah. So
Yes.
yeah, so what I do is I look for, I see if there's any sneaky little candles. I typically, a sneaky little candle to me would be, not if that was a black candle there, but it's not, or that space there, or this space here, that space there. And why these spaces? Because there's something called it's imbalanced the market. There's a it's not fair value, as we discussed yesterday. So let's just observe this. And anytime you see like a space there, so that's filled that up. Let's just see what happens. And we'll ask ourselves, like we did yesterday, where did it stop? We're not changing time frames. We're going to stick to the 1 minute. I think yesterday we did 15-minute predominantly.
Yeah.
So let's just do this because we've just had news. This is why we're looking at this. Show the impact of news, plus also it's a good teaching point. So looking upon this now, I'm starting to see this leg here. Are you starting to see this as this is coming down?
Yes.
Yeah, so I just caught that with my mind. I never saw it before. So I'm thinking, okay, that's the first, like potentially up to the high up there. Maybe a little bit higher, left click. So we're just trying to find out where this goes. And then we'll do something in a minute. I'll show you something in a minute. Quite interesting. Forget that goes. Now, does anybody notice anything from what I've shown them? I need to charge this up. Give us 1 minute to charge this, just this up. Speak between yourselves. 2 minutes.
Lisa, what have you discovered?
I haven't.
Fair enough. I'll then when
Okay.
we come back when he comes back and he asks us and we've got silence.
Yeah.
Has anybody noticed it yet? Has anybody noticed it yet?
I haven't. Lisa said she noticed something, but I didn't catch what she said.
Hi, Lisa. Okay. So let's wait to see how far this potentially goes. I'm just guessing. Let's check.
Is it limited to the number of you've got 5 points there, right? Or five, I don't know if that's 5 waves, but is it limited to a certain number, or could it in theory just go on forever if that pattern's that?
It could go on forever. It could go on forever. No, there's usually a 5 or a 7 wave. So you see that came to there, to there, to there, to there, to there, and then reverse there. So let's say that was the high there. Yep. Now this one's a little bit. The actual low was there. There. The interesting thing, what you typically get, not so much in this case, is these legs here are usually the same size. So you can almost predict the length of the full pack, the pullback. Yeah, the shape's slightly different, but it's almost identical in the pullback size. And that's what I was saying. Did anybody notice that?
I certainly did not.
I did not either.
Do you see that? So all I did was, I'll do that again. I'll clone this, so I'll actually leave it in place. Just there to there. I just right click, clone it, and I'll get another one. That's there, and all of it. And I take that from this high here, and see how that's that there? The shape's slightly wrong, but see how it fits in there, almost perfect. So when you get this here, if you miss this, don't worry about it, because I wouldn't expect anybody to get it inside there, because we're in this consolidation. And we don't want to get caught up in this noise. Nobody wants this. So let it go. And as soon as it does that, look back in time. Look back. And so, right, what was in here? Where was the last move? What was the shape of it? Take it. And when it starts turning, you can almost say, well, I'm not 100% sure, but it could be something like this. Yeah. And then you go, okay. Boom. Sometimes what you also get is this leg here. I clone that. I move it to this leg here. The shape's slightly different, but I'm just bringing this down. A little bit short, maybe a little bit there, but it's pretty close again. I'm sure you would agree. So if you know this is possible, what impact would that have on your trading? If you know that these here are going to be similar in length, and these here are going to be similar in length. So you can, well, you see it can potentially reverse wherever this, well, we don't know if it's there yet or there, but we know it's going to be a certain number of, well, I wouldn't say a certain number of candles, depends on the height of it. I find that quite interesting. I don't know about you. I'm basically asking questions rather than giving information here. I find it interesting. Would that be useful for anybody's trading at all?
Yeah, I can see the application. Again, it's one of those things that visually is about being able to spot these things. You know, like you've got a very attuned eye to it, right? to be able to spot the differences in the candles or the wick lengths or and so on and so forth. So it's sort of getting accustomed to that.
That's why there's typical indicators to help people, David. That's why these indicators are there to support, and they are always lagging. Now, there is an auto one of these, but I don't know where that one. I'll just actually put it on. Auto Elliott wave. So I just go up here. It's a free one. Auto Elliott wave. Elliott. I don't want. There used to be one on auto Elliott wave. No, I don't see they've moved that. Wave to a paid one. Elliott wave, oscillator, impulse. Let me three-wave finder. I don't know if it's that one or that one. Let's just have a look. Let's just see where it finds it, if at all. So that one obviously didn't like it. Let's see what this one does. No, that wasn't what I was looking for. I used one before it actually marked it on the chart. Ah, there we go, have one there. That's not very good actually. No, there is actually a better one. But you have to have an attuned eye, you're correct. But if all you do is in a consolidation, do what that there, that might be useful. Another tool you could do is, everybody heard of a tool called Fibonacci?
Yeah.
I don't know if you have it.
Yes.
You haven't. So I'll just close that there, and I'll just leave that on so you can see it for yourself. Yep. Eventually went on to the moon, and it just kept on going. Whenever you see these type of moves here, or a lot of consolidation, like it's ideally if they're scrunched up like this. There's lots of little tools to use, and I use a particular one. Again, this trend base fib extension tool, and it's got a few different principles. And all I do is I look, like, it's different ways to set it up: highs and lows. And as long as it happens at least 3 legs, like 1, 2, 3, yeah, I feel okay with it. So whether I do it like down there to there, oh, sorry, did that the wrong way, I apologize. There, we get targets. And there's different ways you can use this. You can do it to there, but the real ways to do it is something called a time and price model, where you can almost tell the future using a tool of this, where from previous knowledge, where I'm using a consolidative range, where we have take profit 1, take profit 2, take profit 3. And it also goes the other way, because it could have went that way as well, just so you know. Just be transparent. Yeah. So using one of the tools I use in the 30-minute trader system, we also have this availability. If we didn't have that, well, it's just a trading tool. It's just a trading view. It's absolutely free, but there's different settings for it. So I'm just trying to show you things today that you can do free on TradingView, rather than use my indicators and stuff, because you're not here to find about my stuff. You're here to learn, and I appreciate every one of you's time. So here we are. We're on. Let's forget gold. Lisa, would you like me to look at anything in particular?
The pound USA.
Pound USA, USD. There we go. There. Woo. Was that the one you said? Pound USD.
Yes.
Okay. So let's go back in time. Let's go back in time on the with this huge whatever that was manipulation down here. So my eye would automatically go to there, but does it have to go there today? No, it doesn't. Here's a little free thing for you. Yeah, I'm gonna just draw a GAN box from this body, not the wick, just the body. I'll do that again, so you can see it. The whole of this body, see there, this has went up and it's dropped. So it's left this whole area where there's only sellers in the market. Well, I thought if there was a seller, there had to be a buyer. So there's something, so it was probably news at that time. Now 4:30 is, if you think about it, is 9:30. That's 9:30 UK time. That would make sense. So all I do is I go up here. There's a little thing called a GAN box. There's lots of tools here, squares, fans, lots of different things. In fact, let me go here, for example. There's lots of little things you can do like this. Now, I don't use any of that, but just so you can see how it plays out. I use something called a GAN box. And let's go for the body. I'm not interested. I'm just looking for certain points.
Are these tools?
Yeah.
Sorry, are these tools what you were talking about yesterday being confluence? Is it confluence?
Confluence. But more than that, tools where the market goes again and again to a certain point. And I'm showing you things to, if you look at it enough, you'll recognize, you'll find things. So what I'm going to do is I'm just use this for example. I'm going to put this here down to the body. There. Yep. And all that's done is measured the full length of that, and it's drawn a line there. But me being me, that focus on candles, I would also have my eye drawn to this here. This candle here. I'm going to say something which we've all heard of, even if you've heard of just started trading for the very first time. Let me just check. Irfan, I'm sure you've heard of support and resistance.
Yes, I am.
Yep. I don't use that language. I use something else, but let's just focus on this candle here. So what this did, we had a high, low. So we had a lower, high. Okay, but something broke there for a reason. We don't know. There might be something left. We don't know. But think of support and resistance, for example. That was
support became resistance. Yeah.
Say that again, please.
It means like support became resistance. RBS.
Yes. So I'm going to do this here. I'll just put it to there. So sometimes if this is a floor, you may have heard of that. It hit and it rejected off there, went through, strong push down. There's different phrases. Some people would call this, some people would call it an engulfing, just some people would call it manipulation. Some people would call it displacement. Depends which type of school you go to, where you've learned from. It's left this huge gap here, but my eyes are naturally drawn there. But I've also got this 0.5 of this hole here. So I'd be more inclined for that, to be honest. But with that confluence, I'd be reasonably feeling quite good about that because of that number there. We showed these gaps yesterday. These are a lot of fill. There's a little bit left there. There's a little bit left there. But I know it is coming back up. And let's find where it's pretty close to it at the moment. Now, let's look at that there And let's look at that 50% line which I previously drew. Let's get that line there to the top. I click it. Can I extend it left? Can I extend it left? I don't think I can, so I'll do a different one. Apologize. I'm going to use a horizontal line. And now I can extend it left. Is that pretty fair enough? That's pretty accurate.
Mhm.
And let's check. Did it come close to my 50%? Not too shabby at all, as they say in Australia. Not perfect, but let's just check. How many pips was out? Oh, 1.2 pips out. Depending on the spread, it currently spreads 2.5, 2.6, so that's actually okay. 2.9, 2.3 at the top left here. So for the new people, what spread means, every time you place a trade, every time you do anything, I want you to imagine every time you go to an ATM machine, a hole in the wall as they call them in Scotland, the banks take a little bit of your money. Well, here we trade through brokers, and every time you place a little trade or a big trade, they take some out of your trade. So they're always taking their share first. Yes, you're starting off with negative. So just want to highlight that there. It would still be nice for it to come up to this, to be perfectly honest. That's what I would like to see. So where could that happen? Anytime you see some of this noise, this consolidation, this mess, this buyers and sellers, this accumulation, this is when I would typically go back to this tool I had before and say, well, I'm not really sure where could it end up, but I would only, no, non-affordable, non-tradable, some you kind of, okay, so I can't trade with that, my broker, okay, so that's my broker there. I wasn't looking for that, I was looking for something else. So for this, we have to have certain highs and lows matching. But let's just keep it simple. Go from 1, 2, 3. Yeah, and we pull that out there. There's two ways to use it. That's one way. Another way is you bring this, so this line disappears. You ready for this? So with that line there, hides behind, sorry, that line there hides behind that line. So I'm just going to bring this across. I'm just going to bring this across. And can you tell me when that line disappears? Right there. Is that pretty close? So David, getting back to the phrase confluence, I have confluence of this here, thinking of support and resistance from this candle. I had my idea of 50% there, which it just missed actually. There. I had the idea of where the price come up to there, which was just short. And when I did my fib tool, one of the options it gave me was target 1, target 2, and target 3, which I've previously shown. And having these tools and using these tools can help you put you on the right side of the trade and also knowing when to get out. Would that make sense to you?
Yes.
Yeah.
And that's all I'm trying to show. There's lots of advanced tools, there's simple tools. Let's think of a simple tool. Remember what we did the very first day? I went up here. When I add to this, when I had an EMA. And remember we did that there? And as long as that trade there again stays above the line, let's remind ourselves what that is. I personally use a 62. Some other people use other one. Depends on different reasons. Some other people use a 200. And what that represents, the 200. So to me, that's too wide for something like this. What this represents, in the books, it would say that goes back 62 days of time on average, but it doesn't. It depends on the time frame you're on. So this line averages out 62 minutes of time. So every candle, this moves, and it's based on the last 62 minutes. It's the last 62 minutes, the last 62 minutes. So you're coming down. We think it's down. Oh, it's went up. No, it's not. It's went up. And when it eventually breaks above there and doesn't go through there, there's your buy. Using something simple like this. Well, we think it's going down. No, it's changing up. Well, we don't know if it's changing up because we didn't know there it was changing. So wait for it to go up, come back, and when it starts, forget this first leg. Think of this as like an Elliott wave, this whole thing here. We forget that first leg. We don't know. Because we don't know when it breaks above there, now we know we're in an uptrend. Yeah. And like we did before, where it'll be there, wherever it may be. Let's say there for a minute. What I'm going to do the exact same thing I did before. Let's get these a bit more correct. I'm going to go to my trend tool. I'm going to measure the length. I'm going to clone that. Right click. And when I see this start going down, I say, well, when's it going to stop? I have no idea. But let's see if we can get an idea from somewhere. It's not bad, is it? It's not bad at all. This length was slightly out because it was a bit short. It started down there. Likewise, let's do a test with this one. Is this okay if I share this? Is this valuable at all? I just want to make sure that it's of, this is all about trading. And what I'm trying to say, well, even if I don't have an eye for this, here's this thing. Even if I have I'm showing it was a little bit out there by a candle. It was a candle out there, that wick. What I'm trying to say, think of the tools we've given you so far. A free tool. Go up here. Free. Cost you nothing. Don't have to part of my membership or anything. EMA. The one that's built in. I made it 62. The only reason I have this shape from there, I like that rather than have a line. I like this to stand out. That tells me, right, I'm above that. But I don't know if I'm above that line yet until it confirms it. And it's confirmed it when it's at that point there, where it's broke through the high, because it failed there. At that point there is the confirmation, and not until then. Because there could go up there and turn around. So we're using the market structure. That is higher than that. That's higher than that. Everything's higher. And these, the lows, are higher than these. And as long as that keeps, we're happy. We're happy. We're happy it's still going up. So expect the pullbacks. Use these measured tools. If you don't know how to use any of this, let me repeat it in even easier words. And let me just delete everything, in fact, apart from that there. Yeah. Irfan, are you there?
Yes, I am.
Can you tell me, that's been a downtrend, you can see, based on what I've told you, when would you consider you know that is definitely in an uptrend? Just tell me to stop at any time.
Here, yeah,
Run a bit there.
2630.
Run a bit there. Okay, so I'm just going to do that there. How hard was that?
It's easy, but
Absolutely easy.
it's all about physiology, you know.
Yep, easy. We don't see this yet, but we know something's happened here. I would recommend you wait to get the pull back, and if so, you look for the length of here to match the length of there. And once you get that there, away you go. That's what I would recommend. But before that, yesterday we showed information about why did it stop. We were talking about candles yesterday. Yeah, but now I've shown you another reason why it stopped, because it's all based on market geometry. So if we look at that there, the low, and that there, what's in there, David, will come to you. The space there, isn't it? So there's improper price action that we discovered. So it's actually the top half rather than the bottom half. It's more so at the top, to be perfectly honest. More up there, to be honest, because we've got that wick there. It's only a little bit actually, but you can see that little bit there. Another thing you could look out for is, I'm just going to notice the colors of the candles, Lisa. Can you tell me when you notice one that's different as we go up? Just tell me to stop when you notice a different one. There. Okay.
Yeah.
So that is called a breaker block. Yep, that stopped that there. On mine, we would probably call that a stabilizer block. I just like get order blocks. I always think of when you're at school. In the UK, when you're learning to go a bike at school, you have two little wheels on either side of your bike, and in Scotland we call these stabilizers. Yep, and that's all there. And I've actually drawn one there. It's actually missed that one. It's one there, one there. It's highlighting certain candles, and these candles saying there's something important. I don't know why I missed that one, but if you look at that there where it stopped and went back up, I want you to just, when you're looking at your candles, just go back and say, something happened. That was, so just get the size of that there. I'm looking, I know it's hit that, but I'm actually trying to get the whole, so you see that there. Just missed the top.
And that's just on the body of the candle, right?
Yeah, only the body. I'm only interested in the body. I can also do this to be a bit more precise. So you can, yeah, there's this little wick at the other side there, but so to do that, there's a little magnifying glass here and here. So just do that there. And it hits the top of that, boom, there you go. That's when it rejected off this little sneaky candle here. But the whole time, it's above there. The whole time, it's above there. If it went into there, actually into there, I would call that something else. But so we've got two more there. Didn't come down. We've got one there. It didn't come down. Why did it stop there? Fair value gap, imbalance. Pick a name. Again, it depends on the school you learn from. Okay, it goes up. Why did it stop there? Guess what tool I'm going to go to here? I'm going to go to the body of the candle. I'm not interested in the wick. I'm going to go to the body of the candle. Watch this. I'm going to the body at the bottom. What do you notice about the bodies there? What's that there?
Oh,
Like
that's,
that.
is that your, yeah,
Sorry?
that's your GAN thing, right?
That's right.
So
Absolutely.
50%.
Absolutely. Have you heard of that before? I showed you earlier on today. And then rejected off the 50%.
Only just from what you should.
Yep.
Yeah.
But also confluence with double confluence with confluence of the 50%. We've also got confluence of, guess what? A little sneaky black candle right there.
Mm.
Yeah, and it goes up and it stays above there. And you know, sometimes it goes more than 50%, but there's other things happening. Like little things in there, never even made there, right? I would look for that area there, in there, and that candle, where there's no overlap. This is definitely not for beginners, Leon, what the stuff we're doing now. But we've got some advanced traders in the house tonight. So they're looking for information, so I'm giving them it. So with the last few minutes, so what I want to do is, I've highlighted how this here tells you it's green and it buys. I've highlighted that. I've highlighted it's went green and it buys. But what I've not highlighted yet is with these here, once you see it buys, once you see it buy with a little fair value gap there, there's a high possibility from that there, it could go up. I rejected off there, confluence, and rejected off there. Don't know how long for, but could you have got a little nice little trade out of that? Yes, you could have. Let's come down, do the exact same thing. We've got one of these here. It never came to it. No worries. Let's go to the next one. Little sneaky red candle. Boom. I hit it. Rejected. So all I do is I draw these out in time and I just wait for it to hit one. And at the moment when it starts going the opposite way, there's your trade. As long as there's enough, as long as it's but some value in it, because it could reverse from here. So when you, whether you put this indicator or not, yeah, always think of the bottom as a potential reversal. 30-minute traded direction. Yeah. These here, it could reject off there based off this, but it didn't, it kept. So if you're buying, do not enter the trade until it goes above there. Now when it closes above there, boom, there you go. You put your stop loss the other side, away you go. How can you draw these yourself? Quite simple. You look for a body with a decent sized wick. You simply do this here. Thank you very much. Same thing. But there's, David, as you said earlier on, there's a lot for the naked eye to take in. So what I've done is I've built a set of indicators with all this in mind to help the new or the struggling trader.
Jeff, can you talk about the money line, please?
The money line.
Yes, please.
I've not even put the money line on yet, have I? Have I? That's the money line on. The money line does many things. Just to let you know, this gentleman's actually saw videos of me previously with the money line. It's been updated. There's a lot of bit updates in it. Let me remove everything. I'll delete all the drawings, just keep the money line on. Okay. I'm going to go into it in a minute. But I've got inside here, when this breaks through here, the this whole area and here turns red. And it turns red. Then it turns green as it pulls back, and it turns red. But again, I'm using this free tool that I've given you, as long as these candles are this side, as long as the candle are this side, you can stay in the trade. Now, oh, it's changing. Panic. Well, the good news for you, you've got a line up here where it just so happens, if you want to think of the phrase support and resistance, picks one up there, and it tells you in the future. As long as it stays this side of it, stay in the trade, because you have equity in the trade. You have equity, you have enough equity to stay in the trade. Okay, exit if you like, or you stay in. Now, you get the same rules. When is this officially an uptrend? When it breaks there. At that, not until. Or you want to say above there. Why? Because it failed to break that low, and it broke the high. Let's change pairs for a minute. Let's change time frames. Daily. Let's change to something completely different. Irfan, do you have a favorite pair?
Gold or US 30, please?
Which one? US 30? Gold?
US 30.
US
US
30.
30, please.
Okay. Thank you very much.
Thank you.
I don't claim to be a US 30 expert. However, let's look at it. Now, this is the daily time frame. The daily. Let's look at this with new eyes, no indicators. We're not doing anything. So, what do we see? We have these relative equal highs. My eyes are drawn to here. So straight away, I say, okay, I've got a tool that will tell me where that will stop. I've shown that a couple of times. I go up to here. I go my fib base tool here. And I go, well, it's got to be a certain. So I go from 1, 2, 3. And as long as this, see that line, that's got to hide. Hides. Okay. So how did we get on? Take profit 1, take profit 2. We failed. Would you be disappointed if you even got to take profit 1?
No.
So what we do is to trade this. Yeah. Just remove this for a minute. Keep it nice and easy for you. We draw the same little box I said before. The same little box, and you do absolutely nothing. And when it breaks about there, boom. There's the close, the body's above there. It's closed. Now you're preparing as it's coming up. You prepare. You set this. Good. And away you go. Or you could use market structure. There. Or you could use this, saying, I believe it's going to continue up. I believe. So we're using the confluence of this, of the other tool. Let's see what this says. This would say you would stay out of the trade until you're above there. Then it would go to the moon. I could change the setting on this. I never use that setting. Why is that there actually? It's the 62s are not ready. Let's use a 13. That's a, and you should notice something. Come on. When that turns red, see when that turns red, candle breaks through, exit that trade. Or you could have exited as it went into the red, but it could go above it.
Right.
But I would use this here. It closed below. Yeah, you missed this little bit here. If it goes back up, enter the trade again. But you've closed it. So we have the confluence of this saying, this box, it's a buy. What this saying is it breaks above there, it's a buy. It's above this green, it's above this green. We had this other tool. Remember I used that other tool? And I went all the way down until that disappears, so you can't see it. Take profit one. We had everything. Did I know it would finish there? No, it could have finished up here. But if you have these tools, and this, more importantly, knowledge, things become easier. Yep. So what I focused on there was an area of consolidation where we had relative equal highs and relative equal lows. Up, down, up, down. Yeah, it could stay in there all day. We don't know. A lot of the time it just stays all day long. So we got a breakout. Excellent. I've got a typical tool that says wait to get to the other side and it turns green. Bang, there you go. I have another tool that says stay in the trade till you either see a red or it breaks below here. It's called 30-minute trader direction. But the 30-minute trader, it tells you about little sneaky candles and watch out for. That's because I'm on the daily. It works from the 1 minute to 15 minute. This is for entry. That's why we use this. This here, I'm not actually showing it properly. On the daily, it doesn't really show anything, to be honest. Could go down to the 15. I might show something in the 15. It's a pity our fun you weren't here for the other days. Yep. So let's see what we've got here. So what this here is picked up the money line. What the money line is picked up is notice these relative equal lows here. And then another low. And then it stays above this green line. We have a box that's built in, a little sneaky look, and it's green.
That green also means that is buy signal, yeah?
A little sneaky green. When it's green, that means buy. Boom, goes to the moon. Okay. Target potentially here. Why? Because it's that there. But as long as it stays above here, we can stay in the trade. It's inbuilt. Once you see a red one, warning, warning, close the trade. Just close the trade. Questions, learnings, or discoveries from today, please?
Well, that was pretty cool. Again, I think for myself, the indicators and the visuals of the indicators is just really is a game changer. That's for sure. One thing that I know we haven't got time to cover, but perhaps if you've got like a minute or two, you could just let me know the sort of basic understanding of your methods for basically how much you're risking per trade.
Personally, I risk 0.5% per trade.
Sorry, how much of the of your account are you placing on a trade?
0.5%.
0.5%. Okay.
0.5%. That's me personally. In fact, that's all I talk about in my mentoring program. 0.5%. If you're looking at trading prop firms, and most of them are looking about, well, up until recently, they were giving you 30 days, and they're looking for between 8 to 10%. If you're getting 0.5% twice a day, some people take 2 trades a day. If you're going for a 1-to-1, and I think I've shown that quite easy there. That's that there. You don't have to be a superstar. And I believe that's where people have been going wrong. They're just trying to hit the ball out of the park. If you want to do risk 1%, you can. But if you're using proprietary firms where you can trade with larger funds, other people's money for those. So let me just, for Leon, just so you know, there's a way to trade with other people's money that's not yours. So it's theirs, but you have to pass tests. And what I do in my mentoring program, I prepare people for that. And then when I believe, or when they believe they're ready, I say, do me a favor, take this free test. And I send them to one of the prop firms through a free test, costs them absolutely nothing. And if they pass it a couple of times, I'll say, here, okay. They then charge a little bit of money to go for a real test, where it's a practical test. Most of the firms, you have to pass the test, or 2 tests, practical trading tests. There's some you have to only pass 1. And when you pass these, that's when you can access funds. The smallest one I'm aware of is $5,000. The largest one I'm aware of, without scaling, is $300,000. And I focus on 0.5%.
Which is a nice little 0.5%.
Yeah, nice little 0.5%. It changes your mindset, doesn't it? When you think, oh yeah, that's a nice little 0.5%. So you don't have to be a superstar or greedy. Just take your whatever it is and go. Now, I think I've been pretty fair with my time. Yeah, I've been showing you lots of free stuff. I've showed you a little bit over the last 3 days of insights into the tools I use in my mentoring program. Leon actually knows someone in it already, and he's a new trader with us. He's only been in it a month, 1 month, 23 days. He does very well. He's still on demo, to be fair with him, or I believe he is anyway. Perfecting the art, but with his strategies trading right now, he's on it. This is his 23rd day of learning, of starting from scratch. Typically, I always talk about the newer people because people say, well, what's possible for a new person? Well, what's new? What's possible is if you can follow rules, you can make 1 to 2% a day trading 0.5% with my methods. So anybody else get any questions? I'm sure there is. Questions, learnings, discovered. Thanks for that, David, asking that question. Okay, so tell me, what one positive thing about your time here? Just one positive thing. It might be worth just for you to recognize if it's been valuable or not valuable. So I just want to help people. Yeah, I run a business part of it as well. But
yeah, as I say, I found it really helpful. Just as it sort of paints the picture of what will actually happen. You know, what's going to happen on a trading day, saying charts and picking the trade ideas, using the confluence, using indicators of some description to actually sort of formulate and identify trades.
Yes. And Irfan, you asked the question about the money line. I just switched it on different parts of it. There's actually 3 or 4 things built into it. Are you there? Thanks for saying that. Yeah. So here's something I've not shown, but I've just introduced it recently. So this is the same area here. This is the same area what we were at before. Yeah. What I've introduced to it to make life a little bit easier for beginners is I've colored the background. It's inside the money line, 1.2. Just upgraded today, actually. There's other upgrades today. At this point here, we say there's a volume burst in the market. I'm on the 15 minutes. Supposed to be on this is all aimed for the 1 minute, these here. And don't worry about the direction. We're just saying there's a volume burst in the market. It goes red. And as long as it stays red, you can forget all that other stuff for new traders. As long as you can see this red, you can stay in the trade. Stay in the trade, stay in the trade. It turns a little green there. Exit the trade. Yep. Now, take a breather. That would probably be me done for the day. Well, I don't even stay in that long, to be honest. It turns red again. You might get in that, you might not. It turns green. And again, with this one, you could have actually, so I apologize, entered there if you missed that there. This one, if you stay above that green line. And this is, again, as long as it's green, the background's green, you don't even need to worry about that. As long as the background is green, you can stay in the trade. Exit the trade. Again, to assist new and struggling traders. The background turns red. Oh, I'm going to wait till it goes below there. Okay, there we go. We get the sell. And it goes to that support line. Boom. There. Yes. I think it's short enough. If people want to know more about anything I do, feel free to reach out. I appreciate everyone being here, giving their time up to let me share a little bit what's inside my head. For me, getting where I was, I've got to be honest, wasn't always that easy to begin with. I had to put hours in, and I mean hours. For a while, I was doing 3 hours a day every single day. And when I don't do at least an hour, even today, I feel like I'm missing out. I need to put my time in. People that go to the gym, I just started going to the gym. So if I don't, I've got a personal trainer, and his job is to make me go. That's the only reason I have a personal trainer, because to let him down is worse than letting myself down. Like, for studying that 1 hour a day, if I miss it, I actually feel like I'm letting myself down. So I need to put it in. So if anybody here would like to contact me in the future about accessing my mentoring program, or even just feedback, I would love a testimonial from you. How about that? To say thank you for me giving. If you think there's been a value, of course. If there's not been value, it is what it is. I think I've been fair what I've showed. I think I've done a mix up with free stuff that you can get on a free platform called TradingView, tradingview.com. You don't have to pay for it. The free version, you get 3 free indicators. And with mine, yes, I have 4, but I've pushed so much into these to try and keep it free for everyone, for the people inside my mentoring program. People do want to get involved. It's 155 British pounds per month, which is 197 US dollars. If anyone wants to contact me in the future and join me, you're very welcome. If you don't, I wish you farewell. Trading is one of these things. It's like a bug that you just have to do. But the thing is, once you've cracked it, it's worth it. Once you've, and you don't have to. You see so many people showing off about fancy cars, private jets, and then these people are never in these photos. So these are the people to stay away from. People that share money, I've won this much money, I've won that much money. Stay away from them. That's my advice to you. Because why would they have to share how much they won on different platforms? Anyway, ladies and gentlemen, I really appreciate every one of you being here. Thank you. And if you do want to get involved, please reach out. Have a lovely day. It's my evening, the same as David's evening as well. Leon, thank you. Irfan, Lisa, David, C's at the top. Bye.
Thank you so much.
Thanks, Jeff. Thank you.
Thank you.
Good luck,
Appreciate
everyone.
Bye.
Good luck.
Good luck.
Bye-bye.
Bye.
Bye.